Guys, glad to have you on board again today. We're going to make a really quick one in here because I still have a sick baby boy that requires a lot of attention, and so once again, sorry about the delays answering emails, getting people in and out for trials and everything like that. I'm doing everything I can to handle all this as fast as possible, but be aware that, as always, I'm barely alone handling all this. Obviously, there's still a lot of people supporting in Discord and some friends helping me out, so thanks to them, otherwise I wouldn't be able to handle this. But obviously, when we have those circumstances, it generally requires a little bit patience from you guys, getting the answers to the questions you might want me to answer. Anyway, that being said, we're going to go straight to the market and the crypto market first. So I was expecting that kind of pullback because that bullish reactivation kind of, it was a little bit too aggressive, and when I saw it triggered that stop hunting pattern, I basically said, all right, probably just a false flag to make the stupid guys buying resistances. And when we have this, when the stupid guys are buying the resistance, generally we have a strong pullback for the many reasons, and mostly the one I said back already back yesterday. The thing is that we're still ranging, which means in ranges you want to have interesting prices to get in position. You just don't want to pay stupid prices, and as I saw yesterday probably was going to be stupid prices, I said no, I don't want to take stupid price, just wait for it to eventually get better prices to get in. This is exactly what I've done yesterday. We had that strong pullback, and when I saw that, I instantly pushed the buy button. No questions asked. I've been buying right on the bottom in here. Signals, no signal, just don't give a shit. It's just that I wanted those prices. We can go a little bit lower because we didn't actually trigger a bullish signal. But this is not exactly the 1 hour chart time frame you should have traded on. Remember that you need to trade in context. I think this is where we barely missed the 1 hour chart signal for the reasons I said yesterday. Probably just a 0.5% value that missed to trigger the pattern, but that happens. And in here I would say we should have bought this, which is the trend channel we had in here, and it's probably the 15-minute chart context. Yes, it is. So this is exactly where we should have bought, and you got the signal right in here on support area. So this is what we were expecting, and not the strongest signal ever, so I'm not fully confident that I caught the bottom. All I say is that instead of buying in here, I thought about buying there, which was a lot which made a lot more sense to me. And I think right now this is job done, and until further notice. So I'm just waiting to have further information at that stage. I'm not saying I won the battle, obviously not, but I just think that waiting after missing that bullish move was the only rational choice, and the market kind of proved me right. So waiting for this resistance to break up. Now we're probably going to die in between. We can go a little bit lower, that's not a problem to me. We shouldn't go far lower than that, so we shouldn't accelerate through context. So I would say the maximum I'm kind of authorizing at that stage is just for us to go there slowly but fastly. Sorry, not slowly, fastly. We need to get there and reactivate pretty fast. We shouldn't slip below the context at that stage, okay? We're ranging, which means ranging in a bullish trend, we should buy anytime we try to break through context, which is exactly what we've had so far. Anytime the market tried to break, it failed. Tried to break, had to digest a lot before pushing again, trying to break, failing once again. Now we're breaking resistances. I see the bulls taking it over. But in order to trend bullish again, we'll have to break that horizontal level. So waiting, we're ranging. So all those things should just tell you one thing. You want to buy as close as possible to the support area. You want to keep stop losses pretty large, because you don't have any certainty at that point, and you just want to wait for that damn range to build itself, to terminate, and for the resistance to break. And whenever this will show up and happen, we can confirm the trades, we can eventually reinforce for those who are very aggressive, and then we can forecast that the bottom is probably done, and we can just put ourselves ahead of the potential resistances and targets that we might hit afterwards. So that's it for cryptos. Then we got to talk about GBP, because GBP has been has made quite a rejection yesterday. Once again, same things happen again. Every time we try to go bearish, we fail, which means we're spending a lot more time heading toward resistances than the one we do, than the time we spent heading toward and through supports. So I think bite by bite, we're just killing the bearish sentiment. This is exactly what I kind of want to see in that context of a rounding bottom structure. We were bearish for bad reasons to me, but it's still bearish because we were simply lacking of bullish sentiment. And at some point, the bullish sentiment may just emerge out of the dying, painful end of a bearish trend, which is exactly what we have in here. For a bear, there basically is no longer reward to expect. So in a risk-reward perspective, what the hell would you do bearish right now? There's nothing to expect as a bear. Where the trend is really mature, we could very well expect a last drop. But really, that's this kind of drop, a 4% move, which is enormous out of a forex market, when on the opposite side you're risking, or you could eventually surge to get a 15% move. So guess what? Obviously, speculators are going to get where the reward is the most interesting, and they're probably going to try to buy more than selling. So I think speculators are buying this. I see no reason to sell again. We're trading monthly, not to share multi-year support areas. Why would it surrender? I don't see any reason for that to last. I mean, it's not like the UK was the worst place on earth, and it's not like the Brexit is the only shit that happens out there. We got so much shit everywhere. I mean, trade war, China's growth problems, US problems, because yes, obviously US seems to be great right now, but I mean, do you really believe that? It's just a statistical fiction. We think that the US are doing great because the numbers say it's doing great, but really, do you think it is actually really doing great? No, it isn't. The job market is kind of the most painful it's ever been. Yes, we do have a lot of job in the US, but the salaries, the paychecks are not rising, and people may have to take 2 to 3 jobs to fucking pay their bills. So do you think this is a healthy market? No, it isn't. So the reason why we don't see the numbers we're expecting to see, like inflation or paycheck inflation, I mean the payroll inflation, we don't have them. For what reason? Because the money is not circulating, and when the money is not circulating, it's generally because we're heading into financial crisis. So yes, that world is ugly. People don't like to hear that, but that's what's probably that's what's the most probable at that stage. The economy has been running full cycle. It's been overheating because of Trump's shit. And at some point, we're going to have to pay for that shit. So that's just as normal as it's ever been. When things have been running too fast, just like a motor, we've been running too fast without oil in the motor. Obviously, at some point, either the motor explodes or it just stops working. That's as simple as that. Both ways, it ends up the same direction. So yes, we may expect some economic contraction in the US, but before getting into contraction, we slow down. This is the early signals we have right now. Slow down, and then we get into recessions. So it's not a switch, but we're in the actual timing where the switch is about to be done. So don't think the way you were thinking the last 8 years. Like basically everybody in here and right now is kind of thinking like We're under resistances on the US. Let's talk about the US just straight away. Let's take the SPX. So basically what I see right now, it really is stunning me, is the fact that I teach you guys to avoid doing two mistakes when you trade. The first one is not to be a switcher, which means when you take a bias, when you take a trade, or when you put yourself ahead of a perspective in the future, you don't change. The only two options is you're right, you're taking very nice and you try to maximize those gains. Second option, you're wrong. When you're wrong, you need to minimize the stop loss, you need to minimize the cost of being wrong. And it's simple as that. Right, wrong is what actually happens, but it's not where you are working, where you get your additional value as a human being. You're there at managing the risk. Who the fuck gives some credit to right and wrong? Really don't get it about trading. So maximize the right, minimize the wrong, and just trade. And just don't change your mind. You just don't be a switcher. Switcher are the best losers. All right. So you don't want to be a loser, so don't be a switcher. That's not an option. Second thing, try to make smaller decisions than the consensus. That's all we care about. Because most of the time we're ranging, and in ranges you're going to pick someone else's money, which means you're going to have to make smarter decisions than the average consensus. What you need to do, take the range as a probability, okay? You take a range, so consider this as an area, okay, in which you've got a mid price, okay, and you consider this as being a range. You see, this is average price. Anytime you're going to buy in here, bad decision, which means you probably have been trading a seller prices. Okay, so the seller made a good job, he cut a good price, and he caught you in because you bought that stupid bad price for you, but good price to him. When you do this in here, selling on the bottom, same thing, on the opposite way. Somebody just bought you out and he made a better decision than you did. Simple as that. That person has slightly better odds than you do to make a gain because you took a wrong decision. At least a less better decision than that other person did. It's really that simple. All right, when you buy in here, you just basically done an average job. You could have done better, you could have done worse, but you basically got the average price, which is not that bad. It means you're not, you don't have an advantage upon other users and other traders, but you're not necessarily someone else's dumb, which is really what you should avoid doing as much as possible. So getting in here, that's acceptable. Being in there, pretty great. Being in there, that's perfect. But I rarely catch on those trades. Sometimes I do catch the best price. That's rare. And as the trend tends to mature and we're getting into ranges, it's even harder than ever to catch up on those big, very nice best prices. But still it happens. All I care about is for myself to be in here when I'm a buyer and as close to this and as far as possible from the average price, and obviously try to avoid getting myself into the wrong area. And that's all you should focus on. Okay, those two precise targets. First, don't switch. If you're wrong, you just get the fuck out, take the tiny loss, and get in again the next time you have a timing. Simple as that. You just don't enter right after taking a loss. Okay, when you take a loss, you wait a bit for the price to digest, and then you trade the next signal that comes, at least minimum 8 bars. When you take a loss, take that rule. You took a loss, stop loss, wait for 8 bars before getting in again. All right? Simple as that. It prevents you from getting to overtrade in the wrong direction. Then you just wait, and at some point the right timing will come. Even if that means being wrong 3 times in a row, if you maximize the gains afterwards, it's still going to be a gain. And those tiny losses, speculative losses in between, you really barely give a shit about that. When I tell you guys, generally when I manage to get to validate a trade, go fully leverage, get to the targets, I generally make 15 to 20% gain, when generally a speculative loss is 1 to 3%. So guess how many times I can be wrong before being right? You can count on this. I can be wrong 6 to 7 times and even more than that before actually losing money. And at some point, you're always going to be right. it's always going to come. So who's the wrong person in here? The one that will be proven wrong 3 times in a row is going to switch. And now that the market will prove you right the 4th or 5th time, then now you're on the opposite direction and you're just going to be wrong all the time. That's exactly what you don't want to be. So you need to manage yourself in between 2 extreme behaviors. The first one, the switcher, the one that already doubts that he's been right, wrong, and he shouldn't be gathering those informations or even think about the opposite direction. You need to put yourself in a bias. It's a binary choice. Either you buy, you sell, okay? Or you do nothing, but you have to do something at some point. We're not here to just watch out for the market. We are here to trade. So you pick a bias, buyer, seller. You're going to hope that you took the right one. If you didn't, you go out, tiny loss, all right? You know the drill about that. So the one that will have high level of doubt, really missing confidence in their trading, they're going to switch every time. So worst mistake. The second worst mistake, which is the opposite extreme, is the guy who thinks he was obviously right and is ready to lose it all for this, which is the big difference. I'm sure I'm going to win. Okay, that can be pretentious. You can call that however you want. I really don't give a shit. I know I'll always win. It's just a matter of time to be proven right, but in the meantime, time is money, and you can be proven wrong, which means all I care about is how much it costs me to be proven wrong. How much do I accept to lose to still be proven right? That's more likely this. I'm heading to the gain, but gain can turn negative at some point. Means before getting into gain, a trade can be trading negative for quite a while. The only question you might wonder yourself is just how far am I ready to go before this trade turns positive? Simple as that. You do this, you really get into what a mindset of a trader is actually. I focus myself just on the gains, but the actual reason is just how much am I ready to lose to get to that gain. How far I accept the market to go before I release that trade and I accept the fact that I've been proven wrong. Okay? But I always put myself into gain. That really is what I care about. Do you see me saying, and if we do this, I'm going to hesitate and change a bit? And no, I focus myself on if we're reversing here, we're going to get there and there and there and there and there. And then I adjust the mindset as the prices are ongoing. It's really simple as that. But always in a positive mindset. You're heading toward the gain, not toward the losses. But all you do is that you manage when things go wrong. Is this going wrong just a bit? Some unexpected things, but this is normal. It's still behaving according to the plan. You just got to cut some slack to the market to just let it do what it does, which is not necessarily exactly what you've been predicting. So you let some room for the market to work its way in or out, positive or negative to the entry price, and you just need to limit the risk. You just don't let it go forever in the wrong direction. There are some points you need to stop because it's not rational to maintain the position. You've just been proven wrong, and you're just going to wait for the next timing to try being proven right. And at some point, it's going to come. Markets cannot ever climb forever or drop forever. There are always cycles, there are always bull timings and bear timings, and all you need is to try catching the good one. If you're trying to the upside, try to catch up on a bullish timing. If this one doesn't work, you get out, take the loss, and try the next one. All right? So, anyway, I kind of got myself into talking a lot for no specific reason in here. I'm going to get back to trading, which was today's topic, as we're supposed to do intraday trades. So basically, this is the SPX. Yesterday's been closing at the high, so I expect very well today that we try to go slightly higher than that, kind of an open shadow candle. We're exactly in the low volume area, so we're perfectly into the area in which either the market will break up, but I don't think it that way, or we're just going to fail and retrace. But we can very well spend a little bit of time in here. I don't think we should last for a few days, just a few hours. So if you go intraday, let's say 1 hour, To me, it clearly is. This was wave 4 contraction and we were 5 trading, so this is definitely the final part of that trend if I'm right, meaning if the market is going to go there, we're probably going to fail in the nearby area. I don't know, but any signal in here is going to be a trade to make. So I'm watching now intraday basis on the futures contract, and from what I can see just right now, we might have something to trade. Just let me have a look. God damn it, we still have no fucking signal. That's crazy. But I still expect the market to fail in the nearby area, exactly where I expected us to go. We've got the lowest amount of volume in here, which means if we want to go stop hunting, we can go there for a bit and just stay in upper shadow candle. But really, in a 21 minute from now, if we're closing like that, I think it's going to be a sell to me. So I don't have the signal, but we can clearly see that the momentum is heading to reversing. We're making lower highs in here, so it's a divergence, clearly a divergence in here on all those market tops. So I'm going to take that as a positive signal, even though I think we can go slightly higher, just a bit. And I still tend to expect that we're going to do this afternoon. But if we're doing something like that, I mean, bearish engulfing on the 1 hour chart time frame, I'm definitely going to take that. But it's still 20 minutes to go, so in 20 minutes this candle close could very well look a lot different. So if it closes like that, closing at the lows, with, below the previous hour low, and without breaking the previous hour's high, I think this is definitely something I would like to buy. Even though I still tend to think that we still have one final impulse. For what reason? I still invite you guys to count down the market tops, okay? And normally in here we're terminating the bullish trend, which means we should expect odd numbers of peaks, okay? Odd, not even. Right now we're four peaks, which doesn't fit the plan, at least doesn't fit my plan. So at the current time, I would just wait for this to play its game and a final attempt to the upside later this afternoon, to eventually being sure that this is the good price, which means if you're selling here, you got to let some room for the market to work out this area. So still large stop loss because very high level of uncertainty, and moreover, you have no signals. You clearly see the divergence, but it's not detected, which means you need to be cautious. All right, but I still suggest that this is probably today that the things will be happening, probably this afternoon. But don't be too aggressive. For now, the trend channel is still bullish, and we're kind of grinding our way up throughout the trend channel, or the context channel. So, yes, it's definitely prices you want to sell, and nothing close to prices you want to buy. But we're still late trending, which means bulls still have it in control as far as they haven't lost it. And at some point for now, we have absolutely no clue that they lost it. So either you wait for confirmations or you take aggressive trades, but I suggest if you go aggressive, you put very large stop losses. To me, the stop loss has to be in here. 26.50 is definitely the minimum stop loss you want to set yourselves into if you want to get into selling those prices. That's it. Obviously, if I do take the trade on the SPX, I'm going to take reinforcements on Tesla, Microsoft, Google. All these ones are probably going to get in the same time if this happens. I've been releasing Facebook, Nvidia, and Electronic Arts already, and I think that was a wise choice to make. I'm going to buy VIX, obviously, in the same time. You know about that. I expect us today to just break through, breaking through, getting into that price, which is the support area we've been highlighting. So I think we're just getting in there with VIX, buying, and that's it. All right, so no tough, no complex questions. I think we just try to break, getting in here, or I don't know where exactly we could go, but all I'm saying is that VIX, anytime it reactivates, and it could very well take a few hours, okay? The last signal is in here, and you generally, the triangles have a rule that prevents them from creating another triangle for 6 to 7 bars. I think it's 7 bars. So we still have to wait a few hours to get to have another triangle, and I still tend to believe that we're going to try go in a little bit lower, triggering a final blue signal that is going to be the good one to trade. Or at least at some point in here I'm ready to push the button, but either it's going to be by a bullish breakup or I want the VIX to try go in a little bit lower. We're trading inside channels. You can clearly see those channels, which means algorithms are controlling this market, and you don't want to be fighting algorithms. They probably have a target to fill, and as long as they still haven't filled the target, you won't have a single chance to fight them. I would say the channel is in here. You can really see, I mean, look how precise that is. That's stunning. I barely can believe that at some point. It's really Skynet. You see that? We're probably going to go there, not reaching out to the bottom, or trying to, and then whenever we'll get to reach out to those prices, I think this is going to be the buy signal we're looking for. So still patiently waiting. We're early trading on the new expiration contract on the VIX. So remember, it's a monthly expiration, and next expiration is mid-February. So it gives us pretty much a necessary amount of time to speculate for some bullish reactivation, and I'll get the fuck out under resistance, which means anytime we're going to get to this area, this resistance or this one, I'll obviously get out. So in here is definitely where I'm going to pick the gains. So it's not a long-term trade in here. It's just I'm not going to sell the VIX, just buying it for a pullback. All right. Anyway, that being said, that's all I'd say. Patiently waiting for the market to give signs of bullish exhaustion below resistance, which is very much expected to be at the current stage of those trends, which means we're late trending in a possible market that is reversing bearish. So below resistance, exhaustion of a bullish move, we should have a pullback. Will that pullback bring us to new lows? I don't believe it. I still think that we're just going to retrace back to support areas, which means we find resistance, we fail in here just because, I mean, we're below resistance. That's as simple as that. It's just right now we're selling resistances just like we were buying supports back then. On a bullish trend, you don't hesitate a lot when you're trading at support. You just buy whenever you had a signal, and you put a stop loss below the previous low, which we're exactly going to do in here. Where I'm going to sell in there, in that area, and put a fucking stop loss on top of the previous market top. Okay, so that's simple as that. To me, we're bearish, so we're not going to get there. And if we do go there in a straight line, that means the market isn't bearish. But I don't think it is. I think no matter how hard some people may try to make you think this is still bullish and this was just kind of a glitch in a nice bullish trend, I mean, fuck that. Look at this. Is this a glitch in a bullish trend? No, it isn't. It is if that's the first glitch in a trend, but it isn't. First glitch in here, second glitch is the third glitch. We generally tend to break the thirds. That's how it goes. It's always been that way. And God knows, every time it happens, we still have people think it will last forever and that we'll have glitches all the way through and we can have 10 glitches in a bullish trend. No, we have generally 3 glitches. The first one, that happens after the recession trade, kind of the market isn't bearish, but we're still managing the risk and we still have some bears fighting the resistances. Then we've got the trend, but we overextend the trend. So we've got some problems to solve at that point. So we've got second problem area, second glitches. And then we've got the final glitches, it's no glitches. This was the glitches that was saying, okay, party is nearly over. Next time we're probably going to break supports. Guess what? We've broken supports. So what the fuck is going wrong with people still thinking we're going to go bullish? We obviously aren't. And everything suggests we're bearish. Doesn't mean you have to put your entire basket of money in here and shorting the market. But obviously, if you're bullish on the market, you need to review that because the market probably isn't going to be bullish anymore. Does that mean we're bearish already? I don't think we are. Probably just next year or later that year. But right now, bullish is not an option. So trading bullish and thinking bullish is probably the worst choice to make just right now. You should at least think neutral, or worst, already think bearish. I have the feeling that regarding the stupidness of that bullish trend we had in here, which basically was supported by nothing, I still tend to believe that we're going to have a very brutal reversal, and that whoever think we may even go there or everywhere could just be fucked up. I mean, we're below resistance in what is probably going to be a bearish trend. So we'll see that either the bearish trend is already in place, and that's a possibility. I mean, we've got everything we need. We've got the V-top structure. Why the hell do you think we're going to go there again? We can, but will we? I don't think we do. I think we can just go bearish starting right now and just fucking up every time we retrace the resistances. So, patiently waiting, but have a mindset. You need to pick a side. I clearly have been choosing the bearish side, which means all I care about is when the market goes wrong and goes to the south. When it goes up, I assess the level of risk. I define if I trigger stop losses or not, if it's worth getting out to get in later, or if this is just the market trying to take down stop losses. So you know where my stop losses will be. Obviously, I'm not going to put them just right in here. You know where my stop losses will be. They will be there. So for now, I'm not going to take big trades with huge volume. All I'm going to take is tiny trades to risk reward 1-to-1. And just test the market's temperature. I don't know how it's going to react in here. All I can say is that this is a cluster area, an area of interest, and that's a bearish one. So I'm trading bearish. Those who take the bullish trade and the bullish side of those trades, to me, they're taking a dumb decision. Doesn't mean they'll be right or wrong. It's just in a statistical perspective, I'd rather like to take 100 trades bearish in here rather than 100 bullish ones. Obviously, in those kind of context, the bears will win most of the time. But that specific time, right now, right here on that specific trade, God knows what the answer will be. You never get 100 shots out of 100 bullets. Never, ever. So, if I'm wrong, I'm going to assess how far am I ready to go. All right? For now, waiting for signals, and it's probably going to happen today. So wait for this. Be patient, but I still tend to believe that we may expect slightly higher prices today, just a bit, probably just for a few minutes. I don't expect us to last long in those trading areas, and very likely going to have a doji today and a bearish candle tomorrow. So in a daily perspective, kind of yes, evening star pattern to probably show up in here. Alright, so try kind of a doji, upper shadow and lower shadow, and tomorrow probably the bearish reactivation. Alright, so don't expect confirmations today, not necessarily expecting confirmations today, probably just by tomorrow. Alright, bye guys, trade safe, and see you tomorrow. And obviously, I'll tell you, anytime I'm going to press the button, I'll tell you, not in real time because I don't want you guys to copy me, but let's say whenever I think that we're far away from the enterprise, for you not to blindly follow me, I'll tell you when I got in and at what price and everything like that.